Hello and welcome to KYC. I am Sharad Dubey and season's greetings and a happy new year to all our audience who are watching NDTV Profit and our loyalists at KYC. But before I give you the company, let's give you some guesses. Guess the company today which is coming for KYC. Now, the first one is it's a top global manufacturer of fungicides and herbicides. The second important hint for the company is its recently approval has come in from the Australian market. The third one being very interesting, the volumes which have come up that has seen its highest levels in last 4 years or the last 2 to 3 trading sessions recently. Why the volumes are going up? That's a key concern we are asking. Is there some kind of a movement happening? But I would like to guess the company. One more small hint I want to give you. It rhymes with an abbreviation of IPL. And yes, the company's name in focus is India Pesticides. In short, it's IPL, which I mentioned. The company is India Pesticides. And I would like to know, but why are we calling this company? What is that interesting about this sector? The first one is we will be asking the management, is the pricing pressure bottomed out yet? Second important question would be, most importantly, is the backward integration which is happening, will this improve the margins going ahead? Also, the third important question is, will the recoveries improve in the export market going ahead or not? Also, another important question would be there is this facility expansions which are taking place for PIDA and formulation business, what's the progress in it and by when these benefits can start coming? That is something which you'll be watching out for. And on the show, we are having the management, Mr. Dheeraj Kumar Jain. He's the CEO of India Pesticides. Well, he'll be answering all the queries which we have asked right now and also industry specific triggers for the company. So Mr. Jain will be the person we'll be asking the questions for. But let's give in some more details, about the company, where the overall company stands, what the company is all about and the nitty-gritties which are there. The company manufactures agrochemical business. It's a technical and a formulation. There are two segments on this. They have an installed capacity of 28,200 million tons for technicals, and also looking at the overall formulations capacity that's on your screen, 10,000 million tons. So, and company itself is going under expansion as well. But there's a breakup also. 48% export turnover we are seeing, and the shipping is happening to 35 plus countries. Does this become an export play also? That's something which we'll ask Mr. Jain. The company has obtained registrations for fungicide formulations in Australia. This is the recent news flow. On back of it, there was some positive news flow coming in the stock itself. And also, let's look at the significant milestones which are coming in, and this is the international presence. That is where the company is also focusing at, and they're expected to contribute to the export revenues. And whenever there are export revenues, remember the margin profile turns into the higher side for a company over here. This is the technicals of it, the capacity plants. There have two of them. Both of them are located in Uttar Pradesh. One is in Hardoi. The second one is in Lucknow. Both of these plants actually are having these important capacities. And of course, we will be asking Mr. Dheeraj Jain. He is the CEO of India Pesticides about these expansion plans. Let's see how the revenue split is there. Technical plus API, they are comprising of 2/3 of the revenue. That's around 66%. And the remaining 34% happens to be for formulations business. So there are two businesses where you should be looking out for, but the geographical business, that is even Stevens, 52 and 48%. So it's largely, you could say, half when it comes to the domestic and the exports business. So this is what you should be knowing. Also, the formulation capacity expansion that has increased to 10,000 million tons in Q2 as well. That means companies undergoing this expansion and at full utilization capacity can generate 400 crores of revenue. This is the basic mathematics which you should know. Also, the company has approved 4,000 million tons in-house capacity coming in for this DEA segment at Sandila. That's another place. Also, the company will be reducing the import dependence and the protection of the margins. And I have mentioned you about the integration part as well. And that is where we see the focus would be there. But largely, this will be for the internal requirements. We'll pose the question to Mr. Jain, is that company looking out for a fundraise? If yes, with his debt or internal accruals or both? Also, PIDA capacity, that's expected to be expanded as well, 8,500 million tons per annum. And also, You see this commissioning which is there, that was definitely delayed due to heavy monsoon. So the entire status has to be questioned by the to the management. Now 75% utilization and the revenue potential is estimated to come in at roughly 250 to 300 crore rupees for the PIDA capacity segment. And continuing in this segment itself, a chemical intermediate will be there to produce rice herbicides. This is the name Pretilachlor. This gets very, very technical, so I will break these things down to put it in simple perspective, how the herbicides and the fungicides which the company is operating at. It's technical, but I'll try to break it down for you for a better understanding. But let's see how the ratings we actually give out in our KYC show. There are 8 parameters there where we judge a company. This of course includes income statement, balance sheet, cash flow and return ratios. Apart from this, we also see the shareholding pattern, how things have changed across a period of time. Street cred is nothing but the share price movements across various categories of time and valuations. We compare them with different peers, and the most important thing being the outlook. That is where we are seeing where the company actually stands, or is there something new to the industry. So this will be a lot of questions we'll ask after we have given our KYC rating. The first one let's start with is the income statement. Let's see how the numbers are panning out, and it's very, very dismal. This is the first half of my analysis for the income statement. Revenue, EBITDA margins, remember these numbers, and the last is the most important thing when you judge any company is the PAT. The bottom line is very much important. And look at this number, it's very dismal. 3-year CAGR, it's negative. This is negative, even this is negative. Nothing much happening, but we would like to see the numbers in the September quarter, how that has panned out, and that is where I think there is some kind of an increase in the numbers. That means the pain might be bottoming out. It's too early to say, but just look at the numbers, how it's panning out. Sequentially numbers, if you look at it, it's been decent, and we could say some downtick, but year-on-year basis, the numbers have been going on the higher side. And there's of course a seasonality impact at play as well whenever you have fungicides or pesticides, because India itself has a regular, you could say, a farming calendar, and different pesticides and fertilizers are used in this segment. So you can definitely get a seasonality impact of it. So year-on-year basis, this has been decent. So because of that basis, I will be giving the income statement a neutral rating. Also, let's move on to the balance sheet. That's what, where the action is. Largely, it's a very decent balance sheet. The book value, you see, that's around 957 odd crore rupees. This is very important. The borrowings, generally, it's like a working capital, so nothing much to actually study about. It's actually come down from 52 odd crore to 41 odd crore rupees. But the thing which I would be looking at is the cash bank balance. That has been, decent, 113, 101 crore. It has slightly gone up, 120 odd crore rupees. That means the working capital ratios, the liquid ratios are still doing well. Why I'm saying this? Because the entire industry is coming under pricing pressure. So there has to be a conservative play by the management, and this is what they are doing. That is why net, despite, the numbers looking, pretty decent, I would be giving this still a neutral rating when it comes to the balance sheet. So we spoke about 2 rating parameters, but the third one is also very much important. Of course, we mentioned about the higher cash balances also, but most importantly is the cash flows. This is the third segment which we'll be focusing on, and largely let's see how it actually matters. The operating cash flows, that has been very different this year itself. FY25 was impacted. But the September numbers, that over here we see the operating cash flows has picked up 84 odd crore rupees coming in, and interestingly the cash flow to PAT conversion is also back. So FY25 might have been a painful year, but the September numbers are suggesting a very different story. And interestingly, a 19 crore net cash flow has also come in, and when these things come in, I think it's a good sign actually of things actually getting better. Of course, we mentioned about the cash segment there. That's also doing well, and now this liquidity ratios, they are also looking good. So on that basis, for the cash flows, I will be giving this a neutral rating. So we spoke about the 3 important numbers. Also another important number is the return ratios. That is where the investors want their expectations, and that is where the confusion is started to come in. Earlier we see of all these companies, we need at least 15 to 20 odd % ROE numbers. But from FY21, it has been a downhill, a big downhill coming in, slight recovery coming in, but no benefit of doubt to be given to this company on this. The company needs to perform, the company needs to get the ROE numbers up, ROC numbers up, if it wants the attractiveness to the retail investors, and even institutional support is not there. So I'll get you all those details, and we'll ask Mr. Dheeraj Kumar, the CEO at India Pesticides, is when these return ratios come back or normalize, at least given a 20-odd%. So this is testing investors' patience. So it's a thumbs down for me when it comes to the return ratios. Also, apart from the return ratios itself, let's look at the shareholding pattern, what has happened. The key concern for me when I'm judging a company in shareholding kind of pattern is that, is there institutional participation there or not? Look at it. FI is very minimal, 2%, and then it has gone up to almost 3-odd%. But DIs, there's no participation coming in. The retail is there. That's roughly stable at 34%. So there is no key trend coming out. And my concern only is there with this counter is, where is the retail participation? Are they not liking it? Is there the attractiveness of the agri space? Is it down? That's why I've given this a neutral rating. After shareholding pattern comes your street cred, the way the stock has moved around. And we see last 1 month, nothing has happened. It's largely flattish. But the fall starts coming. In the last 6 months, stock is down 21%. And now I'm understanding why the pressure is coming in. Even the year-to-date basis, nothing has actually happened yet. It's still in the negative. But this has been a 6 months, 1 year program, which I have shown you. Let's see the 5 years performance, how it is, and then we'll judge the company. And look at this. This has actually been a wealth destroyer, this counter, and that is where my concern comes in. And from these levels, will it fall more? That's the question, because there is some issues on the pricing front globally. Companies also conservative. We saw them in their cash flow balances also, and they are not expanding very rapidly also. They are looking something in the export market for sure. So on that basis, on the street cred, I will give this company a thumbs down. But let's look at the valuations, because the entire industry, if it is suffering, that means the peak valuation corrections have started coming in. And if I have to speak about that, very important point is, let's get all the peers also to see where the pain is there. India Pesticides is just at 17 times 12-month forward P ratio. But Dhanuka Agritech, PI Industries, that is also down. These are also down almost, you could say almost 20 to 30% from their valuations. And also Rallis India and UPL. This doesn't make it India Pesticides a very cheap stock, because the entire industry has seen correction coming in, and there might be a reason why it's trading. It is one of the cheapest stocks in the pesticide segment, and that is why I wouldn't be giving this a +1. I'll still give a neutral rating, because the entire industry has sat down. When these reversals happen, then only the market will give you valuations. 7 ratings are done. 8th rating, very important, the outlook. That is where we are looking at, is there any alpha left in the stock, or will there be more pressure? It's a very cyclical company or a cyclical industry which this company is focusing on. The outlook will be for the product registration for 2026. They have started winning, and that's one of the reasons we are calling the management, Dheeraj Kumar Jain, to talk about these registration wins and the demand recovery. Will that happen in export market in Q2? They had mentioned it. But will it continue in Q3, or will it sustain? Progress on the backward integration process, that's also very much important, because this actually helps the company increase their margins going ahead. And the capex and the margin guidance, of course, for 2026, we will be looking out for this stock. But apart from these outlooks, my number for this segment would be coming in at 0.5. But now let's just revise the KYC ratings. Where does the company stand? And I'm not seeing any green thumbs up here. This is very neutral coming in for the company, but the return ratios have been very abysmal. That's why I've given a thumbs down to it. Other 4 rating parameters, let's see what's happening. Shareholding valuation outlook is neutral, but street cred, no major returns to the shareholders. And that's why maybe there's a reason why there is a very lack of institutional participation. So on the lower end of our KYC rating, I have given this company 3 out of 8. Now we'll move on to the management, and we are having Dheeraj Kumar Jain. He's the master's degree in chemical engineering, and also looking at the cred, he was a scientist at IICT in Hyderabad, and almost 30 years of association with the company. So a very rock solid CEO is there at the helm of India Pesticides. And now let's go and talk to Dheeraj Kumar Jain. He's the CEO of India Pesticides. Hi Dheeraj, this is Sharad here from NDTV Profit. Season's greeting to you and your entire company at India Pesticides. So Dheeraj, the question remains is the same, but I always ask it because the pricing pressure has plagued the industry for a long time. Is that pricing pressure coming off, Dheeraj?
Good morning. Thank you very much for giving this opportunity to India Pesticides and a detailed analysis of our company. Sharadji, you have analyzed the company very well. And first of all, I would like to thank the NDTV Profit for this opportunity and wishing them a very happy new year coming 2026. As you rightly said, the pricing pressure has been there in the overall industry for quite some years. Now slowly it is getting released. Now, of course, the prices are getting stabilized, and there is no more severe reduction in the prices. Even the raw material prices have also getting stabilized, and we are seeing a stable performance in the industry.
So Dheerajji, the question remains is, will this continue in Q3 and Q4 because Q3 is about to end. So will we see this in Q3 also?
Yeah, okay.
Dheerajji, the question is, this improvement which you are seeing, the prices bottoming out, is this happening
Yeah.
in Q3 and will this continue in Q4? What is the industry outlook looking like?
No, we are now seeing no more reduction in the prices. They have been bottomed out, and now we are seeing a steady increase or stable prices even coming in the Q3. And we also feel even Q4 also it would be around same.
That's a very important statement coming in. Q3 and Q4, the industry's the dynamics are changing and things are bottoming out. That's a very important
Yeah.
statement. Also, the second thing is the backward integration. That's what the company is doing. So there are two engines of growth coming in for the company. One is the backward integration and the one first question which we had asked you regarding the pricing pressure coming off. So if that happens, what is the margin guidance looking ahead?
Yeah, with backward integration, certainly it has helped the company, and not only the company, even the Indian agriculture industry, because we have reduced our dependence on imports. And we are doing this. We see a lot of opportunity in many products which are being imported today primarily. We can make it in India, thereby reducing the dependence on imports as well as reducing the overall cost of production. Thereby, there will be a positive impact on the margins.
All right, so positive impact on the margins, but a lot of our viewers want to know some ballpark figure. Margin कहाँ रहेगा? क्या range रहेगा? Anything there?
ऐसा एबिटा मार्जिन हमने जो फोरकास्ट किया है वो करीब 18 से 20% के बीच में रहेगा सर, जो पहले बीच में कम हो गया था, but now slowly we are coming in that range. Even this quarter also our margins were in this range, and we expect a similar margin range coming ahead.
And Dheerajji, let's talk about the export segment because that is also giving a good significant revenue for you. And
Yeah.
also in Q2, there was recoveries going very stronger. So just explain us this continuing trend in Q3, Q4 also.
Q3, Q4 also our export orders are quite good. They are very robust, and we see that the export market there will be good recovery and good margins also there.
All right, and facility expansion plans, that is also very much important. And whenever by definition 80% capacity utilization comes in, we ask the company, are you going for expansion or not? And then there are two segments, PIDA and formulation. I would just like to
Yeah.
know what are the plans for this expansion and give us the exact dates. What is the timelines for it? And that's what the viewers want to know.
We have already had a capex of 116 crores this year for FY26, wherein 50 crores we have spent on our existing site at Sandila, that is in Hardoi, and 56 crores we are spending on our subsidiary called Shalvi Specialities, which is coming up in near Hamirpur in Uttar Pradesh. And four products have been planned. Two have already been commissioned this year, and two will be commissioned next year.
All right, so these are the commissioning plans which have been coming in, but
Yeah.
recently there has been two registration wins. Now,
Yeah.
very new viewers are there of our show, which at times they get very confused. You know, what is a herbicide, what's a fungicide? Just give us that small definition, and when you have these registration wins, what actually it means for the company. This is what we want to know. No, if somebody is new coming and hearing this company out for India Pesticides, just help us out. Your registration win, what it actually means, and what are these
Yeah.
herbicides, fungicides?
See, herbicides and fungicides, these are part of the pesticide. Pesticides normally contains three major segments called insecticides, herbicides, and fungicides. Insecticides are the compounds which are used to control the insect infestation. Herbicides are the product which are controlled to herbal development in the plants. That is the kharpatwar, what we call it, that the weeds which come up in the plants, that gets removed. And for fungicides, the fungal growth is controlled. So like that, there are three major segments. India Pesticide is having very niche products for fungicides as well as herbicide range. Almost 40% of our capacity is for fungicides and around 40% is for herbicides and remaining is in insecticide and formulations.
All right.
And
Yeah.
because these are the very regulated products, to sell any product in export market or even in India, we need registrations. So we have to generate a lot of data required for this and apply for registration in each of the country where we want to sell. So first we generate the data and submit to the concerned authorities in each of the countries. They take their own time, almost about 6 months to 1 year, to sometimes 2 years, and in some countries they even take 5 to 7 years. So this without registration we cannot sell in any country. That's why
Right.
registrations are
Yes.
very important
Yes.
in this segment.
So to simplify it, there is a kind of a registration approval comes in, then you have a
Yeah,
country, and then you can start exporting. Remember, the company is having around 50% export revenue as well, the contribution
yeah,
coming in. And now recently, Dheerajji, you have won this order, at least in Australia, that's the recent one coming in. So what's the
yeah.
incremental revenue benefit we can expect from the two recent approvals which have come in?
I think we can get an incremental revenue of about 30 to 40 crores from these two registrations.
All right, so that is a significant addition to the top line as well. And these
Yeah,
registrations which are expected to come in, you will be of course getting them in Q3. You will be recognizing them since you have announced. In
yeah.
Q4, which countries you think registrations will be coming in?
In Q4 also we are expecting few more registrations because registration is an ongoing activity with us. There are almost 7 to 8 applications which are under consideration in various countries around the world. And as and when we keep on getting the registration, at least 3 to 4 registrations in a year, like that, it is a continuous activity.
All right. Dheeraj another query is
Yeah.
regarding the budget, because whenever there is a budget, there is agri sector, and this year was not the year for agri sector. Every kind of information or the focus went to the metals. So just two questions I have. First is your budget expectations from this segment, and the second question is, will 2026 year be for the agro segment, for the soft commodities?
Budget expectation, that depends, what we need probably. We request the government, number one, that PLI scheme should come into the agrochemicals as it has been there in many other sectors. And also there has to be some export incentives for the companies so that they can really have a larger chunk of export in their portfolio.
Well, that's pretty much interesting. But will 2026 be the year for the agriculture commodity segment, or this will be also a soft year?
I think it should be the agricultural commodity for the year because it has been neglected for the last 3 years. We feel that it has to come up this year. And agriculture and these agrochemicals are very essential part of the total agriculture activity. They play a very important role in the overall food grain production of India. So we feel that it has to be re-rated.
All right, so the year 2026 can be the year for agriculture segment, the soft commodities. That's what Dheeraj is saying. He's the CEO at India Pesticides. But Dheeraj, one more question I have, and this is regarding the new technologies. At times, in India itself, the technology part or the R&D, we are lacking most of the times. That's what the industry feels and says. In your case, for your company specific, what is the R&D happening? Any new technologies you are working at, or is it just business as usual?
No, we are basically an R&D focused company. All our products, whatever we are making today, they are all based on our own market, our own R&D efforts. And we have a very big R&D center, and we are already working on many molecules. Some of them are already existing molecules. Some of them are new molecules which are going to be off patent in the coming years. So we are working on those molecules, as well as we are working on some molecules which are primarily being imported today, but we can make them in India. So we are just wondering why we are not able to make. So we are trying to work out a cost-effective technologies for these molecules so that we can make in India, so that we can reduce the overall dependence on imports.
That's a very strong statement coming in. Reduce the dependence on imports and be Swadeshi with a very strong R&D backing. Thank you very much, Dheeraj ji, for taking out your time and giving the details about IPL, India Pesticides Limited, and best of luck for the future, and a very happy new year to you and your team.
Thank you so much, Sharad ji, for giving us so much.
Yes, so that's the management for IPL, and it was a very interesting chat. Remember, the stock is beaten down, and the management has stated that 2026 can be the year of agriculture and commodities. So we'll be watching this theme totally, and in case any alpha comes, I will share with you at NDTV Profits Deck. But that's all for the show. Thanks for tuning in to KYC. Keep watching NDTV Profit.